Okay, we'll get started. Hello, everyone, and welcome to the webinar Understanding and Anticipating U.S. Custom Tariff. My name is Bruno Gravel. I'm the Vice President of Business Development at Access International, and I'm pleased to welcome you today to this webinar. Before we begin, I need to clarify that this webinar will focus exclusively on import into the U.S. We will hold a separate one, especially for imports into Canada, March 31st. I encourage you to register for that one. We'll share the registration link in the question and answer or question Q&A or Q&R on top of your screen. Please also note that our webinars are all recorded and they will be available on our YouTube channel, Access International Inc. I'm joined today with CEO of Access, Pierre-Marc Gervais, who will do part of the presentation with me, and also Abdul Dabous, one of our business development coordinator, who will assist us in the question period at the end of this session. One thing I would like to highlight today, that this year is the 20th anniversary of Access International. So we thank you for your trust, and we thank you for your business and the trust that you placed in us over all these years. Oh, I lost my screen. Okay, let's talk about the agenda for the day. First, we'll start by talking about the custom tariff, more especially the US tariff. We'll talk about the role of the importer, the importance of a proper documentation, the methods to pay US custom duty. We'll talk about the bond requirement, and at the end, we'll have a question and answer. We'll start by answering the most frequent question that we received over the past few weeks, and then we'll open the Q&A for you to ask your own question. There's a lot of people with us this afternoon. I think we're going to be more than 130. So we'll try to answer as much question as possible. Otherwise, we'll give you some link at the end of the webinar so you can send more specific question to us, and we'll make sure that we answer you. So let's get started. Pierre-Marc, can you explain to us what are custom tariffs?
Absolutely, Bruno. And I want to thank you all for being here with us today. It's a pleasure to share that with you. So let's start with the basics. So what's a custom tariff? Custom tariffs or duty is a tax that is imposed by a country's government when a product is imported into that country. So simply put, this tax can be calculated as either a percentage of the product's value, which we call an ad valorem tariff, as a fixed amount per quantity that is a specific tariff, or as a combination of both. The tariffs will vary depending on the type of product, the country of origin, trade agreements such as free trade deals, and there are also certain special cases where tariffs may be avoided. But generally speaking, it's the importers who pay the tariffs. The importer can then decide whether to pass on some of or all of the costs to the buyers, right through to the end customer.
Precisely. How would you describe the current situation in this trade war as of today, March 28th?
I would love to avoid the word chaotic, but I know there's been a lot of confusion because many changes have occurred. And so we've prepared for you a chart to show you what is currently in effect. The boxes highlight the tariffs that apply to imports into the United States that are coming from Canada, so Canadian origin goods, because these represent the majority of the measures that we face in Canada. There are also tariffs on products from China, which aren't included in the chart, but I'll explain those as well. So what's currently in effect when you import into the States products with Canadian origin? So all products that are not eligible under the Canada, United States, Mexico agreement, the CUSMA USMCA, are subject to tariffs of 25%, with the exception of energy products like oil, natural gas, uranium, and potash products. These are tariffed at 10%. As of March 28, 2025, so today, products that are eligible under CUSMA can still enter the US duty-free. In addition to this tariff, there's also a 25% surcharge on steel and aluminum and all derivative products which apply to all countries. So let's take a pause here. If you have a steel product that is not eligible under CUSMA, that is imported from Canada to the States, well, the total surtax will be 50%. So you have the 25% from goods from Canada not eligible to CUSMA, plus the 25% on steel, which makes it 50%. And what's really, really important here is the country of origin and not the shipping point. Make sure that it is properly documented. We'll cover that later. Now, for products from China or Hong Kong, so again, here we're talking about country of origin, there's now, as of today, an additional 20% surtax applied to all products. This surtax is on top of any existing tariffs. Again, here, an example. If you have a product that is already tariffed at 7.5% coming in from China, well, the new total would be 27.5% for that item. So 20 plus 7.5. And if the product includes steel or aluminum, the total could reach 52.5%. Now, what we see also, what's been recently added to the slide is the last line, April 3rd, for automobile. So complete automobiles that will be imported into the States from any country, they will be tariffed at 25%. This is what has been announced earlier this week. Before we conclude this slide, we need to talk about April 2nd. There's been a lot of speculation about that date and the possibility of what's been called reciprocal tariff. The bad news there is that we don't know the details. We don't know what's going to happen on April 2nd, what's going to be announced, but significant measures could be announced, which is why everything we're about to explain today is so important to help you prepare. And now, Bruno, if we move on. So we had a first wave of tariffs that we've lived through. So can you talk about some of the observations that we've made at Access during this first wave of tariffs?
Yes, for sure. There's a few traps. One of the key points to understand is that tariff is calculated when the product actually enters the United States. It's not based on when the importer sends the document to the broker or to the carrier, or when the release is accepted. In that context where things are changing quickly, this detail is very essential. To give you an example, we have a case where an importer thought the truck would cross on March 3rd, but actually it crosses on March 4th. Keep in mind that between the 4th and the 6th, all Canadian products, even those that are eligible under CUSMA, were all subject to 25% tariff. As a result, the importer had to pay 25% because the good entered between the 4th and the 6th. This is why we recommend clear communication with carriers. They should not move the goods without your approval. Let's make sure you have an open communication with your carrier. Since April 2nd is approaching very fast, this same situation could repeat itself again. Regarding the steel and aluminum tariff, there's a lot of information. I think we could do a whole webinar on this, but I will probably, for more details on that, I will probably refer you to go and get our practical guide on our website, where you'll find a lot of information on steel and aluminum. So take the time to get informed. It can make a big difference depending on whether the 25% is calculated either on the total value of your shipment or only on the steel or aluminum content. Likewise, if you're using American steel, most likely the 25% won't be applicable. So knowing the origin of your product is very crucial. Lastly, the United States currently does not offer any drawback or exclusion possibility for the tariff that are in place. We'll see what happens on April 2nd, but it could be the same. So it forces importer to rethink their strategies. So you have to make sure that you do it right the first time. Because if you change something and you forget to exclude products that are not made of steel or aluminum, you cannot get reimbursed on the duty assessed on that item of your shipment. So again, we recommend caution to avoid those costly mistakes. So one of the things we've noticed also in the last few weeks, there's a huge confusion around the identification of the official importer, the importer of record into the United States. Pierre-Marc, can you share some finding on that?
Yeah, that's a great question, Bruno. And what we've seen is that there's often confusion between the importer, the buyer, the carrier, and the exporter. But the most important thing is to understand who the importer is and what their role entails, because they carry a lot of responsibilities, like paying duties and taxes, complying with customs procedures, and having an adequate bond. We'll talk about the bond later in this presentation. Now, who is the official importer? The official importer is the one listed in the US customs documents as the responsible party for the import. They must gather and produce all the necessary documents for the importation. I think the confusion arises because in Canada, we often have Canadian companies that act as both the exporter and the importer into the US. And that makes sense. The Canadian companies, they want to offer turnkey service to their American customers. The Canadian seller is also more familiar with the process as they export regularly, whereas the American buyer may only import once or twice a year. So what happens is when the Canadian seller, who is also the exporter, handles the US customs formalities, well, they become the official importer. In the US documents, this person is called the importer of record, and they don't have to be a US company. They can be a non-resident importer, which is all common and perfectly legal. But, yeah, follow me here, the company acting as the official importer must be aware that it bears the full responsibility for everything related to the import. The custom broker is there to support and represent the importer, but not to replace them. One question that we're often asked also is whether the consignee in the US can pay duties directly to customs. And the answer there is no. The consignee is the party that's going to receive your product, but it doesn't mean they are the importer. So these are two different things. It's always the official importer who is responsible for customs clearance and the payment of duties to the custom authorities in the States, CBP. However, the importer can invoice the consignee afterwards for the duties as long as there's an agreement in place. So I hope these distinctions help to clarify that the importer is not always the buyer and that it is the importer who is legally responsible in the eyes of US Customs. And Bruno, you work closely with many of our importing clients along with your team. You help them set up proper documentation to facilitate imports. Can you explain to the audience why good documentation is so important and what's required?
For sure, thank you. Good documentation is essential to calculate the custom duties. You need to know the classification of the product. You need to have a proper description, know the origin of the product, the value, and if there's any exception as well. And one important thing also, it's to know if it applies to any trade agreement that are in place. If we go back to the example of the steel that Pierre-Marc mentioned earlier, it is a striking illustration. Like proper documentation also help custom clearance delay. If we receive information, missing information, there's going to be a back and forth between the broker and the importer exporter, and that's going to probably create delays as this is something we don't want. For instance, if a certain permit are required, they must be provided. So otherwise, the clearance won't happen or will be delayed. Incorrect or incomplete documentation expose you, the importer, to the risk of fine, penalties, and even a result as a complete ban to import into the US. If ever custom audits you, your paperwork needs to be in order. It's much easier to be organized and start defending your case that way. All documentation must be kept a minimum of 5 years plus current year. I want to emphasize here a few critical points concerning the commercial invoice and the pro forma invoice. It is very important that you clearly indicate who is the importer of record on your documentation. Also, you need to clearly identify who's the custom broker. Ideally, us, Access International. So this will avoid a lot of confusion and accelerate the custom clearance and avoid also many errors. Finally, on your invoice, you must also specify whether the CUSMA certificate applies or not. So on your line of description of the product, mention if it's a CUSMA product, meaning Canada, US, or Mexican product. If not, give us the origin of the product. Let's talk about the certificate of origin. Let me give you an example, but before I do, let's start by explaining what is CUSMA or USMCA. As you see here, we have two acronyms that are the same, just depending on which side of the border that you're located. So first, this has been in place since July 2020, and it has an initial term of 16 years. Every 6 years, there'll be a joint review done by the three countries. The first review is scheduled to be 2026. It's coming very fast. One of the three countries, if they want to withdraw, they need to give a 6-month notice to the other country. Let's talk about the certificate itself. It is the importer responsibility to determine whether the goods qualify under the agreement. You'll find on our website under the client section many templates for the certificate. You could either use a blanket for 12 months. You list all your product that are USMCA on that list with the HS code and everything, and you send it to us. So we put it on file in our database so we know that your product qualify. Also, there's another solution. It's to use a single certificate for every transaction you do. So the importer, who is most of the time the exporter at the same time, will use that certificate to benefit from a duty-free importation. That could be highly advantageous, especially these days when goods are qualified under USMCA. Speaking of paying duty, Pierre-Marc, can you explain how duties are paid in the United States?
Yes, of course, Bruno. And unfortunately, now we're seeing duties that have to be paid. So in the US, the importer can pay customs duty directly to Customs and Border Protection, CBP. Now to do this, the importer must register with what we call the Automated Clearinghouse, ACH. We do offer at Access webinars in both French and English, along with guides to explain you how to register to the ACH. And that is the recommended method because it allows you to take control of payments no matter what the future holds. Now, as of today, we know what the tariffs are. Next week, 2 weeks, in a month, I don't know what they're going to be. 5%, 25%, 50%, I don't know. But setting you up on ACH will protect you, will allow you to pay duties directly to CBP, whatever happens. When you register for ACH, you have two options. You can choose between ACH debit or ACH credit. We recommend at Access that you select ACH debit. What it means ACH debit is that CBP will withdraw the exact amount directly from your bank account. It needs to be a US bank account, okay? It can be a Canadian bank that has a branch in the States, but it needs to be a US account, not US dollars, but US addressed account, okay? So CBP will withdraw the exact amount. So that way you're always paying the correct amount and you'll never be late because CBP is the one initiating the payment, the withdrawal from your account. Of course, you must ensure that funds are available in your account. And we'll go over an example a little bit later to explain you what a payment schedule could look like. The other option you have with the ACH is that you have the ACH credit. So if you select ACH credit, what it means is that you, yourself, the importer, you must initiate the payment. This means that you make sure that you pay the correct amount and also that you pay on time. You really don't want to miss a payment. Penalties of several $1,000s can be imposed. Another benefit of ACH is that it allows you to enroll in the periodic monthly statement or PMS. PMS lets you consolidate all your transactions for the month and pay only on the 15th working day of the following month. This gives you financial flexibility. So it's a great option. And again, our next slide will show you an example. Finally, what we recommend also is completing your ACE portal registration to gain access to reports and reconcile your imports and invoices. In summary, to pay duties, what we suggest you do is that you register for ACH and ACE. You can do both at the same time. Once you receive your ACH confirmation, then you can enroll in PMS. Count on 2 to 3 weeks on average for the entire process. If you have all the documentation, you have your bank that's set up, etc. So 2 to 3 weeks on average, that's the time it takes. Again, watch our webinars and follow our guides to help you through it. The alternative method is having your customs broker pay on your behalf, and then you reimburse the broker. That used to be the most common approach because we were in free trade and there were not many tariffs. But now with today's high tariff, the credit lines offered by brokers are often no longer sufficient. So brokers will offer you different options. So they can require you prepayment of duties or to give a security deposit based on estimated duties. It is more complex for everyone, but it has become necessary in the current environment with such high tariff levels. And so Bruno, if you move to the next one, so we can bring an example to bring all of this together. So let's say we have a sleeping bag with origin Canada, and we'll go with different dates to show you the impact of the dates and what it means to have a certificate of origin or not to apply CUSMA and how what kind of flexibility PMS is going to give you. So if you look at the table, March 3rd, if the product qualify under CUSMA, no tariff will apply. So it was duty-free coming into the States from Canada. If it did not qualify for CUSMA, so non-CUSMA, the tariff in the schedule is at 4.7%. So this is what you would have paid when you imported the sleeping bags into the States. March 5th, remember again here, between March 4 and 6, everything coming in from Canada was tariffs at 25%. So the tariff was 25 for CUSMA eligible products, but 29.7% for non-CUSMA because it is a surtax that is added to the actual tariffs. March 8th, CUSMA eligible products again were duty free. So you see the 0% for CUSMA, but the 25 stayed there with the actual tariff of 4.7 for a total of 29.7. So if you look at a $40,000 value, the duties payable could have been between 0 and $11,880 depending on the date and if you had the CUSMA certificate or not. So these are the duties that you would have to pay to CBP. And all these duties are payable by the importer of record. The IOR, as if it doesn't have any PMS, no periodic monthly statement enrollment, he has 10 business days to pay the duties to CBP without any PMS. With PMS, what it means is that the payment is only due on the 15th day, business day of the next month, which is for April 21st. So the way PMS work, all your transactions in the month of March, you will receive a statement on the 10th business day of the following month, so in April, and on the 15th day, then you pay the duties. So great flexibility to pay your duties, especially when the duties are as high as 25% tariff. So Bruno, another impact of the new tariff is that importers bonding in the United States may become insufficient because of these tariffs. So can you tell us more about what could happen and what are customs bounds?
Certainly. First of all, I think it is important to know that any import entering the United States that the goods value exceed $2,500 US, it is mandatory to have a bond to cover it. Without a bond, the entry of the good may be delayed, penalty may apply, and the good may even be seized. When you work with us, we always make sure that there's a valid bond in place in order to avoid these issues. There's two types of bond. There's the single entry bond, which is valid just for one entry. And there's also the continuous bond, which is valid for 12 months. Most importers choose the continuous bond. As soon as you have little volume or more volume into the States, we will tell you that a continuous bond, it's much better and much cheaper economically in the long run. But this bond must be for a minimum of $50,000 US minimum or cover 10% of the duty, taxes, and fees paid over the last 12 months or the next 12 months, depending on your projection for next year. In this context, with the duties in place at the moment, the amount covered by the bond may become insufficient. If it's the case, US Custom will send you a notice and you will have 30 days to comply. We recommend being proactive. If you know that your products are going to attract a higher rate of duty in the coming month and you don't think the $50,000 will be sufficient, maybe it's time to renew the bond for a bigger one. So it is very important that we assess the volume over the next 12 months as well. Pierre-Marc, on your side, can you explain why an importer should use a custom broker? We had this question many times over the last few weeks, and I think our position gains more and more importance, but I'll let you explain.
Well, there are simple ways to do it. So, like you've mentioned with the bond, to make sure that you don't run into problems, well, your custom broker will be there to check that you have a bond on file and that it is sufficient. So we assess you for that, but it goes way beyond that. And I'll know that I'm preaching to the choir here, but a custom broker play a highly strategic role for importers. And this is even more true in the current climate. What's happening is that, well, custom tariffs are constantly changing, more responsibilities are being placed on importers. And now, in the past few days, we've seen more scrutiny from custom authorities for your good. They're asking for more documentation and they're doing more inspections. And every small detail can impact costs, timelines, and compliance. Your custom broker has deep expertise in customs laws and regulations, document preparation and management, and also representing you before custom authorities. Yes, I know you can handle a lot on your own, but it's always better to have experts at your side. And that's exactly what we offer at Access.
So we're now moving into the Q&A session. While you prepare some questions for us, on top of your screen, you have the Q&A. We will cover a few questions that we received that are the most frequent one that we got in the last few weeks. So how do we determine if my product is affected?
Most important thing to know if your product is affected or not is to look at the custom classification. So the HS or HTS code of your product, that's crucial. It will often define if duties are applicable. And you need also to look at the country of origin. So custom broker or international trade expert can assist you. There are tools that you can use, like EDC has a tool that's called Tariff Finder that can help you, but always double check with an expert because there are some exceptions sometimes, and then different way to classify different goods that can have a big impact on the tariff that you're going to pay.
Another question we have, does 25% tariff applies to all country or only specific one?
Currently, so as of today, March 28, 25% tariff apply to goods that are not CUSMA eligible. that have country of origin, Canada or Mexico, and coming into the States. So again, we have this webinar focusing on the States. So the 25% is for goods with Canada or Mexico origin coming into USA and are non-CUSMA. We also have the 25% on steel, aluminum, and derivative products, and that is for all countries across the world.
Third question on that slide. Who should pay the custom duty?
In general, it's going to be the importer of record. That's the person, the organization that is responsible for the payment of duties and taxes to custom authorities. This may be your company or a client, and it depends on the Incoterms that you've selected. So in some case, it's going to be the exporter that's going to be responsible for that. Sometimes it's going to be the importer.
Are the tariffs permanent or only temporary?
As of today, we've looked into Federal Register, Customs, Executive Orders. No end date has been specified. Now, we know that things are changing constantly. It's a fluid environment in which we are right now. I don't know for next week. I don't know in 2 weeks. But as of today, if you ask me, there's no end date.
Is there any way to avoid, is there any exemption, like possibility of doing drawback using free trade zones?
For these specific tariffs right now, in the executive order, the drawback is not allowed. So there are no exemptions that are applicable for the current tariffs. Again, that might change, but that's what is the status as of today.
Thank you. What are the consequences of an error in the custom declaration?
So it depends what the error is or how frequent you're making errors, but it can go for penalties, additional duties. You need to remind yourself that there's a liquidation date that's roughly 314 days for most entries coming into the States, in which your entry can be reassessed and additional duties can be imposed. You could also get fined for non-compliance, and it can go up to a suspension or revocation of your right to import into the US.
I think the next question is very important for our audience. Is there any action that we can to reduce the impact of tariff?
Yes, well, it's a question that we often get trying to avoid or mitigate the effect of tariffs. And the first one, I know we've said it a lot, but we need to see it again, is to analyze your products. So make sure the classification is okay, to make sure you get the right country of origin. And with steel and aluminum, we're going to ask you more details on where that steel and that aluminum is coming from, because there could be different level of tariffs depending on that. You might want also to optimize your supply chain. We know for some industry, it is possible to ship separate parts instead of a finished product. And the total value of separate parts might be lower than what it is for the final product. So in some case, that could be an option. Some will see for different suppliers around the world where the tariff they don't apply. So that's all looking at your supply chain. And the last point that we're bringing is to discuss Incoterms and custom responsibility with your partners. So if you have a sales contract, you want to make it clear who's going to be responsible to pay the duties that are applicable right now. But if it changes in a week, in a month, you want to think ahead so that you're prepared. Sometimes you can have price escalation clause in your sale contract to say, okay, well, right now this is the situation, but if it changes in a month or two, we are prepared either to split the additional duties, or it's only one party that's going to bear the entire responsibility of these additional duties. So these are discussions to have as soon as possible with your clients and suppliers.
How should our audience prepare for April 2nd?
Well, you're already doing a great job being here today, so I congratulate you. But other steps that you can take, first one is to subscribe to your newsletter and to your or LinkedIn page so that you can stay informed. We're trying always to share the information as quickly as possible. So when something new comes out, we're going to analyze the details and bring it in a format that's that you can digest as easily as possible, while we remove all the complexities. What you want to do also, like Bruno mentioned earlier, is to communicate actively with your carriers to avoid any surprises. So if we think that there could be some new tariffs coming into force, let's say April 3rd, what you might want to hold your shipment and tell your carriers, don't cross before you get my go on April 3rd, because I don't know what the tariffs are going to be. Maybe you say it's 5%, you say, okay, let's go clear. But if it's 50%, you might not want them to cross on April 3rd. So if we don't know, be proactive, have that open channel communication with carriers. And again, for the state, it is the date of entry that makes the difference. If your carrier is waiting in line on April 2nd at 11:55 p.m. and because there is jam at the border, you cross on April 3rd and tariffs are there, well, you're stuck to pay the tariffs. So avoid that. You want also to prepare your documentation. Make sure everything's in order and that you get as many information and the certificates and the permit and clear description of your goods so we can assist you with all the documents that you need to cross effectively. And finally, again, there is to have discussions with buyers to clarify roles and responsibility. We've talked a lot about that, but add these discussions as early as possible. Don't wait.
Okay, another question we get often is how to include the 25% tariff on the pro forma.
So I guess the question here is how do we push the tariffs to the buyer? So if we're the importer, yes, we're going to pay to the custom authorities the 25% tariff, but we want to push it forward to the end buyer. So what you can do is to include a specific line indicating the surcharge amount. As an example, you can include a visible comment. It's important that it is super clear so that your broker can process this correctly on your pro forma invoice, such as duty included, so that we know that in your value for duty, you've included that amount so we can deduct it and you're not paying duty on duties, which would be a nonsense.
Okay, and our last question here is, are there any deduction to reduce the value of my shipment?
There are possibilities, but they are quite limited. So it depends if these the costs, the fees that you have are separate costs or they are directly related to the manufacture of the good. If they are separate costs, then yes, you can, but we need to do a full analysis of that. If they are directly related to the manufacture of goods, then no, usually you cannot deduct them. It may be possible also to exclude certain costs, such as trade discounts, shipping insurance fees, if they have not, if they are included in your selling price and they have not already been deducted. You cannot deduct a fee that is not included in your selling price. It wouldn't make sense otherwise. So what I suggest to you is always to consult an expert for proper documentation on the costs that you would like to deduct to make sure that you're respecting the law.
Thank you. We will move now into the Q&A session. On the top of your screen, you have a Q&A or Q&R, depending on the version of Teams you have. You could send us also specific question to our online quote on our website. If they're very specific to your industry or your product, I would ask you to ask these online quote instead of general. We'll try to answer as much question as possible. Abdul, I invite you to join us now and read a few questions for us.
Thank you, Bruno and Pierre-Marc. That was very insightful. To start off with the questions, I have a question from Crystal. She imports an aluminum derivative to the USA. Should I still fill out a CUSMA or is it useless now?
No, fill the CUSMA also, because if you're good, I mean, if it's aluminum products from Canada and you don't add the CUSMA, well, you're going to be 25% on top of the 25%. You're going to be 50%, which you want to avoid. So CUSMA, it's still in effect. It's still there. I don't know for April 2nd, but as of today, CUSMA is still there, still very useful. Take advantage of free trade agreements. So yes, yes.
Thank you, Pierre-Marc. Next question. What's happening with the de minimis rule or Section 321 for southbound freight?
It's a great question. So de minimis, for those that don't know, is if you have a shipment that is valued at $800 or less, it can move duty-free and without a formal entry into the United States. This is still there. The de minimis hasn't been removed. I don't know if it's going to be there for a few more weeks or a few more months because it's been under heavy scrutiny. But as of today, the de minimis, it's still there. You can still use it. So if you have goods valued at $800 US dollars or less coming into the state, you can still use it. Yes.
Just a clarification here before you tell us the next question, Abdul. Please don't raise your hand. Write your question in the Q&A, please. Go ahead.
Thank you. Is the ACE portal similar to the CARM portal that we have for Canadian imports?
Do you want me to take it or you want to take it?
Go ahead, you're on a roll.
Well, it's different. The ACE portal is mostly to create reports. In CARM, yes, you can create some basic reports, but it's not the same at all. CARM is also where you make your payment. So in Canada is where you can see the value of your financial security, is where you can see your statement of accounts. So ACE is a bit different. You cannot make any payment through ACE. It's only to create reports. But yes, you're going to know to be able to see the amount that you owe to CBP through the ACE portal. So there are some similarities, but it's a bit different in my opinion.
Okay, thank you so much. Is the USMCA certificate required for goods that are not made in Canada, US, or Mexico? Or is it only for all these three countries?
No, the USMCA is made for product made in Canada, US, or Mexico. You can't put another country on that. That will invalid your certificate of origin. So when you have goods that are manufactured in another country, it needs to be described on your commercial or pro forma invoice.
Thank you, Bruno. I have a question from Danish. He's sourcing steel from the US to use this material to manufacture finished products. So 100% of USA material, he's asking if 100% of US material gets a 25% tariff under Section 232, but avoids a 25% back to USA as long as the items are USMCA compliant. Will he still have the 25% surtax?
So just to make sure I understand your question, so you import into Canada steel from the US. So right now, if you import steel in the US, for most of it, you need to check the proper classification, but Canada imposes a 25% surtax on steel coming in from the US into Canada. Now you use it to make a finished good into Canada that you export back to the US. So again here, on the steel portion of that import into the state, because you're using US steel, that steel will not be tariffed at 25%. It will be duty free, but only for the steel portion. For the rest of the value of your good, that's going to be tariffed at 25% if it's non-CUSMA. If it's CUSMA, then it can enter duty-free into the States. So that's, again, the situation that is today. We'll need to do a full analysis of your situation, but from the information that I've heard from Abdul, this is my understanding of your situation.
Just want to clarify a few things that we covered in the beginning of the webinar also. It's not where the steel is coming from, it's the origin. In the case of steel and aluminum, it's either the mill or the pour that will become the country of origin. So let's be careful on that because there's a lot of steel coming into the US and resold to Canada.
Yeah, that's a great clarification, Bruno. It's always a country of origin and not the where it's shipped from. In the States, you have steel that can be coming from Brazil, from China, from Canada, from Spain, from UK. So they're still coming from all over the world. So this certificate, the mill certificate, are super extra important to know the origin, the exact origin. Yeah. Great point.
Thank you so much. Is there any more question?
We have one last question, if we have the time. For steel parts, do we need to add a separate line showing the steel value only, or is it the cost or sales value?
So if you're importing into the States product that are classified outside of Chapter 73 for the steel, you need to report, well, you need to let us know the invoice line reference number or part number that you have, the full HTS code. And if it has steel, we need to know the value of the steel content, the weight of the steel content, the steel country, melt and pour. So we need to know all these information, and you put it on a separate line. So we can separate the value of steel from the value of the whole product so that we can apply it correctly. If we don't get that information, I say we had access, but any broker is going to be the same. If we don't get that information, then the 25% for steel and aluminum will be applied to the value of the whole product and not only to the steel portion of the product. So it's a great question. Yes, you need to be as specific as possible for that. So again, it's the value of the steel content itself. Now we have a full guide on steel and aluminum that's available in on our website in the practical guide sections that you can go and read to have all detailed information on steel and aluminum and how to report it.
Great. Thank you all for your question. Let's move to the next slide. Pierre-Marc?
Yes, second, Bruno. Okay, here it is. So before we wrap up, I know we've shared a lot of information with you. You will receive a copy of the presentation, which will include several useful links to help you find everything we discussed. On our website also, I know you'll find many guides and document templates that we've presented today. We've also developed video tutorials on ACH and PMS. We strongly encourage you to check them out. They're all free. Thank you for your participation. Bruno, I'll let you do the conclusion.
Thank you very much. We've reached the end of our presentation. Thank you all for your attention. Just for your knowledge, Access has been providing international transportation, Canadian and US custom brokerage consulting services, and for more than 20 years. We're celebrating our 20th anniversary this year. We thank you for your trust, and we invite you, as Pierre-Marc mentioned, to visit our website. Send us additional question. If you have any additional question, we'll be more than happy to answer your question. So here's a list of our contact. And don't forget, Monday, March 31st, there will be a similar session, but this session will be more based on Canadian tariff, and it's going to be more specific to imports into Canada. On behalf of the entire Access team, I would like to thank you for your participation and question, and hope to see you again soon. Thank you very much.